Hello, and welcome to Virtual Investor Conferences. My name is Matt Lateplo, and on behalf of OTC Markets, we're very pleased you have joined us for our next live presentation from Denarius Metals Corp. Please note you can submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I'm very pleased to welcome Mike Davies, CFO of Denarius Metals Corp., which trades on the OTCQX Best Market under the symbol DNRSF and on the CBOE CA under the symbol DMET. Welcome, Mike.
Great. Thanks, Matt. Appreciate the opportunity from the OTCQX today to present our story today. Over the next 20 minutes or so, I'll take you through our slide deck. We're an emerging metals producer in Spain and Colombia. We have a lot going on and a very interesting story full of optimism about the future for us to start production at 2 projects within the next 12 months and a pretty solid basis for that optimism. First, draw your attention to the cautionary notes regarding forward-looking statements, information, etc. that I'll be covering today. So as I mentioned, we're an emerging metals producer in Spain and Colombia. Denarius was put together through an RTO process in early 2020. And in selecting the projects to build our story around, we looked for projects focused on in-demand critical minerals. We cover quite a range of minerals from copper, zinc, lead, nickel, gold, silver, cobalt, platinum, and palladium in our 4 projects that we have under operation at the moment. We also try to select our projects based on the proximity and the right jurisdictions, the ones where we are comfortable operating, have the skills and the knowledge to be able to operate. And we certainly look for who's also there as an opportunity to de-risk our projects, knowing that there's some big projects around that are already successful. We also select projects based on the rich history that these projects have, both with high grades and exploration upside, but also a sound exploration and operating background to help us de-risk the restart of the operations so that we can minimize risk and maximize our opportunity going forward. We have a seasoned team who believes that ESG is part of our long-term strategy. And with 2 projects in production within the next 12 months, we believe that we have the catalyst in place to support a re-rating of our equities within the next 12 months. Our 4 projects are based in Spain and Colombia. 3 in Spain include the Aguablanca project, which we acquired a 50% interest in late November last year. The Lamero project, which we own 100% and acquired in 2020. And the Terrell project that's the subject of an option agreement right now that we started in late 2022, all 3 of which provide us a solid foothold in strategic areas of Spain with big projects for future production. And they're complemented by our Zancudo project in Colombia. It's a near-term producer, high-grade gold, silver district that our team has a significant amount of exploration and operating success in. I mentioned our seasoned management team. So Serafino Iacono is our executive chairman and CEO. Also our largest individual shareholder of the company, strongly believes in putting his investment behind the companies that he is building. Myself as the CFO and Alessandro Cecchi, our VP Exploration, have worked with Serafino for more than 10 years each. And we are supported by a solid team of staff in not only our Toronto office, but our operations in Spain and Colombia, and a board of directors that complements management, not only with the know-how, but the know-who, in order for us to be successful in operating in the areas in which our projects are located. As Matt mentioned at the outset, we trade on the OTCQX, and we also have our primary listing on CBOE Canada. We started trading on the OTC back in early 2022 and migrated in 23 up to the QX. Currently have 66.2 million common shares issued and outstanding. We also have another 50 million warrants at 60 cents that still have some runway to go that we believe at some point will be a generator of additional cash opportunity for the company as the re-ratings take place. We have $33 million Canadian of convertible debentures that we've issued in two series, one last October, which is listed on the CBOE, and a second set that's unlisted that was completed in June. Proceeds of both of those debentures have gone into the projects, largely the Aguablanca project in Spain, as well as some monies into our Zancudo project in Colombia. Currently have a market cap around 39 million Canadian, of which 25% of our shares are held by management on the board. Serafino holds about 10% of the shares, but he also holds warrants and convertible debentures. He's covered on all of our major securities. Aris Mining has a legacy 16% interest that they acquired through the RTO process. And then 59% of our stock is out in general hands in the market. A few large institutional funds and a pretty sizable retail component as well. So let's start with the Aguablanca project. We acquired it in late 2023. We bought a 50% interest. This is a project that was discovered in 1994. It operated for 11 years from 2005 through 2015. Lundin Mining bought a position in the project and ran it from 2007 until the end. In 2015, as it was migrating its environmental license from open pit to underground, the project was halted by the government during that period. And in early 2016, Lundin ultimately walked away from the project amid a deterioration in base metals prices. The current Rio Narcia private shareholders acquired the project in 2021, and we came in the fall of 2023 buying a 50% interest in the project. Strategically, it's a very important acquisition for us. Our focus in Spain is largely on critical EV metals. We're looking at becoming a low-carbon metals producer in Spain. The Aguablanca project really fits that strategy well. It's the only mine in Spain capable of producing nickel as well as having copper. It is a historic producer, and there is an identified exploration upside that we are building a drilling program around to start next year. It really enhances our goal of becoming low-carbon metal producer within the European Union. It's only 88 kilometers away from our Lamero project, so it really solves the issue for us of where are we going to produce the material that we're going to generate from mining operations at Lamero. Key aspect of this plant for us is the 5,000 ton a day turnkey processing plant, and I'll show you some pictures of it shortly. This really was the missing link for us in our strategy for Lamero. It affords us an opportunity to have a central processing plant for our projects in Spain and not have to be building expensive plants at each of our projects as we bring them into production. It has the environmental and the mining license already in place for underground mining. The only permit that we still require is a water use concession permit, which we applied for a couple months ago. The site visit was recently completed as part of the approval process, and we expect to have our water use concession permit by October this year. Once that's done, we can get into dewatering the open pit to get access to the underground. We recently opened the portal of a 2-kilometer ramp that Lundin had built into the underground mine. It's been kept in good shape, and we're very excited about getting going with this project once that permit's received. We're expected to be in production in 12 months. We are the operator of the project. That's the skill set that we bring to it and why the Rio Narcia shareholder group wanted us as a partner in the project. We are in discussion with them about how we can integrate their 50% interest in the Rio Narcia project and the interest that we have in both Rio Narcia and Lamero into one overall package in the company. So the negotiations are going on in terms of how we can best achieve that goal and expect to have some news on that later in the third quarter. Here you can get just a general aerial view of the plant and the site facilities. This was a real game changer for us to have a plant already in existence, well maintained over the years by the private partners. You can see there's a large facility available to us, which can be split to handle production separately for both 2,500 tons a day from Rio Narcia and 2,500 tons a day from Lamero. It's got two twin lines that can be operated separately, so we can keep the concentrates from Rio Narcia, which will be a nickel copper concentrate that we'll produce, similar to what they did in history, and keep that separate from the concentrate from Lamero, which also has lead and zinc in it, and would produce some separate concentrates once we complete a few upgrades of the second line for that material. So a tremendous asset for us that allows us to accelerate our strategy around our Lamero project, because we don't have to go through a long construction process to build a plant in order to get Lamero up and running. It'll also shorten all the environmental approvals that we'll need for starting up the Lamero project. And we'll take you through Lamero in a few slides later to get a sense of where it's at. From the historical data that was available to us, remember Lundin operating this had qualified reserves on the project during their day. From the historical information, we published a resource in March of this year, 5.3 million tons at 0.65% nickel and 0.58% copper. That's consistent with the mined grades that Lundin had over the years that operated the open pit, which were about 0.59% nickel and 0.35% copper. The PFS that we've now produced has a mineable reserve of 4.7 million tons at similar grades. At the same time as we published that updated resource and reserve, we did publish a PFS study for the project, 4.8 million tons being processed over 6 years using 2,500 tons a day capacity of the plant, leaving the other 2,500 tons a day available in the future for the startup of the Lamero project. Nickel grades of 0.66% and copper grades of 0.58% in the PFS, a $7.30 selling price for nickel, a $3.50 selling price for copper, yields some fantastic results with an average all-in sustaining cost of $4 a pound of nickel, net of the byproduct credits, $105 million of undiscounted after-tax cash flow from the project over the 6 years, an IRR of over 200% and a 1-year payback. The startup capital for the operation at Aguablanca is about $6 million US, a couple $1 million for the refurbishment of some of the items in the plant, repainting and changing a few items that we've identified that could be upgraded, about $2 million for the dewatering that needs to take place, and another $2 million for some surface infrastructure that we would put on site. We're going to operate the mine through a mining contractor. The contractor that we've identified and are starting to negotiate contracts with works in the area, as is doing a number of the other large mines in Spain. So we'll bring the capital, the equipment, the personnel, etc., to do the mining. We'll be responsible for operating the surface facilities and the processing plant. The underground mine contractor will also do all the development for us as part of the contract. So this gives us a low startup capex for the project, and that's why our all-in sustaining cost of $4 a pound over the life is very attractable. And at current prices, the economics are even more robust than when we did the PFS. We've also identified through the historical records a number of other areas below the underground mine that we can start to drill. And so we do have a drilling program planned to start next year as well. And we think that that's going to extend the life of the PFS beyond the current 6 years that have been identified. So let's have a quick look at the Lamero project. We acquired the project in 2020 following the RTO of Denarius. It's located in the Iberian Pyrite Belt, nestled amongst a number of key players in the mining area, Atalaya, Matza, Las Cruces, to name a few. We've done a lot of networking over the last 3 years with the other mining companies in the area to get some intelligence around cost, ESG strategies, and operating strategies to support our efforts there. We're sitting right in the mineralized trend, about 10 kilometers to the west of the Aguatanitas project, owned by MATSA. We've got about 600 hectares of licensed area. The Lamero Poyados area, you can see there is the larger one, the pink in the middle of it, outlining the historic mine that operated in the area. And post-acquisition, we found there was a dormant adjacent license area called Palmarejo. It had been suspended by the government due to lack of exploration work by the previous owners. We were successful in reopening that license area in early 2023. And so we've got another 3-year period to start adding to our exploration programs there. So we're in the right jurisdiction, in the right neighborhood, and on the mineralized trend. The other thing that really attracted us when we started looking at the background to Lamero was the rich history of data that we've got available to us. The exploration data set was really important, especially the results during that Cambrian mineral resources period. And then production from the mine historically focused on pyrite. So the thing we've discovered so far is through our drilling is that most of the critical minerals were left behind given the previous owners focused on pyrite. We've done a couple of resource estimates as we drilled the project from 21 through 2023. The latest resource in July of 2023 showing 7.7 million tons at 0.66% copper, and with the other minerals giving us almost a 2% copper equivalent, and another 3.5 million tons of inferred material at almost a 1.5% copper equivalent. So we've got a very sound base of a project to work with. And what excites us now with the strategy energized by the Rio Narcia acquisition is we now know where we can process that material. As I mentioned earlier, it's only 100 kilometers away, so it's economical for us to be able to truck the material. We'll probably pre-crush it before we truck it, and we can process it at the Aguablanca facility, saving us a huge amount of time and CapEx to get started at production from Lamero. We currently have an investigation permit at Lamero, so we need to upgrade it to a mining license before we can start mining operations. That could take 1 to 2 years to get completed based on our experience in Spain so far. So that's the process that's getting started. We're currently working on a PEA for Lamero. We expect to have that completed later in the second half this year. That will integrate our operations for both Aguablanca and Lamero under one plant strategy. And with that full picture, we can show the robustness of our strategy of having these two mining operations, putting their material through one plant. And then the Terrell project in northern Spain. This is owned by Europa Metals. Europa bought it a few years ago and has put a bunch of money into drilling the project to date. We're looking for a partner to come in and help them take the project to the next step. That's where we stepped in late 2022 and signed an option agreement with Europa where we can acquire up to 80% of the project in 2 stages. It's a high-grade zinc, lead, silver project in the north of Spain, a couple hundred kilometers from a zinc smelter owned by Glencore, but equally accessible by road for us to the Aguablanca project. And one of the serious considerations we're now looking into is whether it makes sense for us to not build a plant at Terrell, but to make use of the plant that we have at Rio Narcia and ultimately use the processing capacity there to our advantage to push the process forward for Terrell and produce everything under one roof. The first option for 51% is moving along well. We've been at it for about 1.5 years now. We've spent about 3/4 of our $4 million minimum spending commitment at this point. We've also filed the mining license application to the local authority in 2023 as required. The only thing left for us to do is complete the balance of the spending required. A large part of that's going to be taken care of through the completion of a PEA, which we expect to have early next year. And at that point, we'll be able to exercise our first option. And then a second option that we can exercise within the 12 months after that by paying $2 million to Europa and completing a PFS gives us a natural strategy where we've got Aguablanca coming into production in 2025. We would have Lamero coming into production in 2026, and probably see Terrell coming into production at the end of 26 or somewhere in 2027 to round out the package of assets that we currently have in Spain. That would give us over 40 million tons of identified material available for us to be producing in Spain, covering, as I said, a lot of the critical EV minerals that the European Union is focusing their critical mineral strategy around. Europa published a PEA study in 2023. In 2022, they had published a resource, 7 million tons at 5% zinc grade with the lead and silver credits. That's about an 8.9% zinc equivalent. And then another 13 million tons of inferred material at fairly strong grades as well. We did 9 holes and 6,200 meters of drilling in 2023. A large part of that focused on infill drilling to upgrade resources from the inferred to the indicated category. We're currently rolling that data into the data set. And as I said, expected to use that then in an update of a PEA in 2024 towards the end of this year. Switching continents, South America, Colombia, the Zancudo project is a project that our group knows well. We'd first been involved with the project in 2010 when we were part of Gran Colombia Gold. The project in 2020, when we completed the RTO to create Denarius, was vended in by Gran Colombia. At that point, expecting to have only a 30% interest in the project, as IM Gold was earning in through a drilling program. Fortunately for us, unfortunately for IM Gold, they walked away from the project before completing that earn-in, as they needed to focus on other projects within their portfolio, and we retained our 100% interest. This is a former producer. It sits in the Cauca Belt in Medellin. It's close to to Medellin, as well as a number of other large producers that surround it. And some projects that we've had previous experience in, such as the Segovia project to the northeast and the Marmaro project to the south of Zancudo. It's a historic producer dating back over 150 years. It's been closed since 1945, so it's not been subject to any invasion or other issues during that time. We've got 4 concessions, 1,000 hectares of area embracing that historic producing Independencia mine, which runs down the right side of the 4 concessions. We also own a piece of land in there that we bought in early 2022, which is where the process facility and the other infrastructure items that we're going to be building will sit. It's close to the town of Titraby to the south, and it's about 100 kilometers away from Medellin. It's accessible to highway, so we can truck the concentrate that we're going to produce quite efficiently to the ports. We do have our mining permits in place. We're currently waiting on the environmental impact study to be approved for us to be able to start mining operations. The site visit by the local environmental authority was completed last week, so we're eagerly anticipating an approval of that EIS within the next month or so, at which point we'll be able to start mining. But in the meantime, we do have construction activities taking place to get ourselves prepared for that eventuality. Historic drilling by Gran Colombia and IM Gold allowed us to generate a resource in late 2023, 4.1 million tons containing 1 million ounces of gold equivalent, 860,000 ounces of gold with a 6.5 gram average grade using a 4 gram cutoff. And we used an $1,800 gold price. If we use a lower cutoff grade, say 3.5 grams, because gold prices are much higher than 1,800, that resource would go up by about another 20%. So there's a lot of gold to be had in the exploration efforts of that area. We've identified already in the map, you can see to the left side of the chart there, the gold area being where the site of the resource is with the Independencia mine. The white shaded areas being the exploration area that we're now targeting through a drill program we started in April. And we expect to have some preliminary assay results available to produce a press release within the next couple of weeks. But we are finding gold grades as expected based on the geologic model. Our early focus on the exploration is really to upgrade from inferred to indicated, but the later part of this drilling program is going to start to get into some extension drilling. And we see lots of opportunity at this project to add gold ounces in the areas that we've identified over time. We also produced a PEA level document for Zancudo last year to demonstrate the economics of the mining operation that we're currently in the process of restarting. 10-year mine life, 3.5 million tons processed, continued high grades gold, and 106 grams to note for silver. With good gold grades, we've got an offtake contract signed with Trafigura, as we announced a few months ago. And with that, we've confirmed the payability that we're going to get for the project. It's got a $15 million initial capex, again, because we're going to use contract mining, where the contract miner has gone in and opened up the areas. There's already a 1 kilometer main ramp into the mine from its historic mining that they've refurbished and got ready. We are focused on the surface facilities, the crushing plant, which is completed, the processing plant that'll produce concentrates, which is in the process of being shipped from China to site. Some containers have already been received and will be up and running later this year. And a road that's going to allow us to access the main highway directly from the site and bypass the local communities. With an all-in sustaining cost of $1,000 at $1,800, at $2,300 gold, because some of those costs are tied to the price of gold, that all-in sustaining cost is about $1,200. We see a life of mine project cash flow over $200 million, a 287% IRR, and another 1-year payback type project, given the leverage we get out of the existing mining operations. So a significant opportunity for us to start generating cash flow by the end of this year, and next year and the years thereafter, generating more than $25 million a year of after-tax cash flow to support our ongoing efforts in the company. We are moving towards production, solid efforts around ESG in the community. I'll just get through these next couple slides quick, because I really want to take time now to get into the Q&A. First question, can I discuss the milestones over the next 12 months and capital needs to support? When we look at Zancudo, the main milestones for us that we've got to get through: the EIS approval, which we expect within the next 1 to 2 months, and the startup of the plant operations later this year. We are currently looking at local plants in Colombia as an opportunity to do some early stage mining and process material through a toll milling type arrangement to get some cash flow sooner than when the concentrate plant's ready, but be in full production with the concentrate plant by early 2025. The capital we need for that is about, including the exploration program, about $10 million. We've got cash in the bank from a royalty that we sold on Zancudo earlier this year, and about $9 million coming in through an offtake prepayment agreement with Trafigura that will round out the financing for the project. At Aguablanca, as I mentioned, $6 million of capex needed to restart there. The water use concession permit being the most important thing for us to be able to get started on the dewatering program and be in production by the end of the first half of 2025. We are currently working on a couple of financing opportunities that allow us to fund that CapEx, as well as the planned exploration program for us for that. So those would be our major catalyst, really focus on getting these two projects into production. Terrell and Lamero will continue to move forward, but a little slower pace as we focus on the really important stuff at Aguablanca and Zancudo. Question coming in on the origin of Aris Mining's involvement. At the time Denarius was created, as I mentioned, the Zancudo project was vended in by Aris' predecessor, Gran Colombia Mining, into Denarius. It was really part of taking a project, Zancudo at that time considered to be low on our priority list, and putting it into the evolving Denarius framework to take it forward. Aris is, I would say, an investor, but they're not actively involved in any of the day-to-day activities of the company. They're focused on their strategy in Colombia and have been supportive to us in some of the earlier stage financings. But other than that, we just maintain our focus on our separate agendas. And with that, I'd like to thank you for joining us today. Any of the questions we didn't get to, we'll